How do a few powerful families shape the world? Wealth can be a hidden force, growing in the shadows, untouched by the public eye. The Rothschilds are one of the most influential families in history, but their wealth isn't just a matter of riches. It's about control, trust, and the history of global power. The Rothschild family's rise didn't happen by chance. It was a careful orchestration of timing, trust, and strategy. A foundation built not on luck, but on a deep understanding of money's hidden gears. The world was changing fast in the 18th century, but in that change, one man saw an opportunity. Meyer Amschel Rothschild didn't just enter banking. He reshaped it. In 1760s Frankfurt, he wasn't simply a moneylender, he was a master of connections. Royal families across Europe needed money, and Meyer provided it. Not with just cash, but with something more valuable: trust. Meyer's genius was in understanding not just the market, but the people who controlled it. Through royal ties, he was able to bypass many of the barriers that others faced. Instead of struggling to win contracts, Meyer had the ear of kings and queens. He made loans to them, often without collateral. What he offered wasn't money, but leverage, the ability to grow empires without the risk of losing them. His wealth wasn't just built on coins, but on the trust between him and the ruling class. It wasn't long before Meyer's empire outgrew his hometown. He had 5 sons, and each was sent to a different European city to expand their network. The Rothschilds were no longer just a family. They were an international force. But how did this family, one that started as humble bankers in the city of Frankfurt, become the most powerful financial institution in Europe? It's not just about wealth. It's about relationships. Trust is collateral in the world of the Rothschilds. Confidence is collateral. Now, as we turn to the family's expansion, we'll see the key elements that made their system not just work, but flourish. The Rothschilds knew that banking wasn't just about money. It was about control. Control that would eventually stretch across nations. What happens when trust becomes the currency? The Rothschilds didn't just create wealth, they engineered it. They didn't work within the system. They redefined it. And at the heart of their success was a simple mechanism: debt. But not the kind of debt most people think of. Debt, as it turns out, can be a powerful tool when used right. In the early 19th century, Meyer Amschel Rothschild's sons began to fund European governments, not with donations or grants, but with loans. Large loans. The kind that kept nations afloat in times of war, revolution, and expansion. It wasn't just money they were providing, it was leverage. And leverage, when used correctly, can move mountains. The Rothschilds didn't just offer loans. They sold security to monarchs who needed funding for wars, to generals who required supplies, whatever the case. The Rothschilds were there to fill the gap. They established a network that allowed them to move information and resources faster than anyone else. It was this speed that became their trademark. If a battle was lost or won, they knew the outcome faster than anyone, and they made their moves accordingly. But the mechanism that made the Rothschilds untouchable wasn't simply their ability to lend. It was their ability to create a system of interdependence. Nations needed the Rothschilds just as much as the Rothschilds needed nations. Their loans were built on the fragile trust of rulers, not in tangible collateral. It was a brilliant system. But like all brilliant systems, it was fragile, and that fragility grew as the stakes grew higher. The more they lent, the more they had to control. They weren't just financiers anymore, they were power brokers. Confidence breeds trust. Trust breeds control. But what happens when that trust is tested? When the very mechanism that sustains the system starts to show cracks? Next, we'll see how this empire, built on leverage, began to fuel the very inequality it promised to solve. The The Rothschilds' empire didn't just grow, it exploded. And with it, the leverage they used to fuel that growth. But here's the thing about leverage. It doesn't just amplify wealth, it amplifies inequality. As the Rothschilds expanded their influence, their wealth wasn't the only thing that grew. So did the disparity between the powerful and the powerless. The more the Rothschilds lent to governments, the more they became entangled with those in power. And in that entanglement, wealth was redistributed, not to the people, but to the few. The Rothschilds were masters of a financial tool that allowed the rich to get richer. They lent money to governments, to monarchs, to those in power, and in return, they controlled vast portions of national economies. Interest payments became the lifeblood of their empire, and those payments were secured by the backs of the poor. Leverage creates power, but it also creates fragility. The more nations borrowed, the more they became indebted to the Rothschilds. Governments found themselves in a spiral of borrowing and repayment, while ordinary people saw little to no benefit from the wealth circulating above them. It was the rich helping the rich, and the poor paying for it. The Rothschilds weren't simply participants in this system. They were its architects. They built it, fueled it, and made it their own. And in doing so, they cemented their place at the very top of the financial pyramid. But as all systems do, this one began to break down. When you rely on leverage, the pressure can become unbearable. The cracks that began as small fractures soon turned into fractures that could no longer be ignored. Control is only an illusion when leverage becomes the game. So, what happens when the system you created, the one that relies on debt and trust, becomes too fragile to survive? We'll examine how the Rothschilds managed to navigate the coming storm of systemic collapse. Leverage and trust are powerful until they aren't. The Rothschild empire, once seemingly invincible, reached its breaking point in the 19th century. The cracks began to show. By the mid-1800s, European economies were stretched thin. Wars, revolutions, and inflationary pressures mounted. The very debts the Rothschilds had helped create threatened to unravel. The system that was designed to be foolproof became its own worst enemy. The Rothschilds, however, were masters at navigating crises. They had weathered previous storms, financial panics, market crashes, even failed revolutions. But this time things were different. The growing web of interdependence between the Rothschilds and the nations they had loaned money to created a new kind of risk. It wasn't just a matter of money anymore. It was systemic. If one link in the chain broke, the entire system could collapse. The Rothschilds had always leveraged trust. Now that very trust was starting to erode. The system they had designed, which once appeared rock solid, was being exposed for what it was, fragile, built on an artificial sense of security. And then came the crashes, the 1830s financial panic, the 1850s stock market crises, and even the collapse of the 1873 panic. The more the Rothschilds tried to bail out countries, the more the holes grew. But the Rothschilds remained resilient, maneuvering around these crises by adapting, manipulating, and waiting for the right moment. It wasn't just about survival, it was about maintaining control. The real lesson here wasn't just about financial crisis, it was about systemic risk. When you've built a system on debt, leverage, and trust, it's not a question of if it will break. It's a question of when. Power doesn't lie in wealth, it lies in control. And when control slips, so does everything built upon it. So how did the Rothschilds survive a system on the brink of collapse? The answer lies in the mechanism they created. But what happens when that mechanism stops working? Let's turn the page to the modern mirror of what they started. The Rothschild empire may have been built in the 18th and 19th centuries, but its legacy is alive and well in today's financial systems. What they began with loans to monarchs and empires now runs through the veins of global finance. The tools may have changed, but the game remains the same. Today, the world is filled with debts, governments, corporations, and individuals all living on borrowed time. The Rothschilds may no longer be the sole financiers of nations, but the same mechanics they perfected are still in play. Banks like Goldman Sachs, J.P. Morgan Chase, and even central banks themselves operate under the same principles the Rothschilds established. They provide capital not just for businesses or governments, but for the entire financial system. And once again, leverage plays a central role. Debt fuels growth, but also traps those who borrow. The more money moves, the more it fuels inequality. Just as it did in the Rothschilds' time, the illusion of control remains. Governments borrow from central banks, which borrow from private investors. In this system, those who hold the debt hold the power. The Rothschilds knew this well. They weren't just lenders, they were power brokers. And their wealth wasn't just about money, it was about shaping the world around them. But today, the stakes have only grown. As nations pile on debt to finance everything from social programs to military operations, the question is no longer about whether the system will collapse. It's about when.